Welcome to The Interest. I'm Ryan Kingsley. This Thursday morning, we're joined by LaDonna Lockard in her new segment, Maximum Conversations in Minimal Time. After that, our own Vincent Valvo leads us in a poetic moment, and then stay tuned for Mortgage Meteorology with Sarah Wolak. But first, a story. It's been 6 years since Figure Lending began using technology to revolutionize the way home equity loans are originated, using automation to underwrite homogeneous loans that, when securitized, investors will understand and hopefully fall in love with, increasing competition for these loans in the private label secondary. In 2023, Figure proved their premise true. The company achieved 4 rated HELOC securitizations, each oversubscribed with better pricing than the next. If it makes you wonder, what's next for the company? Well, here's the story. Ask Jackie Frommer if she runs a finance company or a tech company, and she says,
So I work for a tech company that is driving financial innovation.
Figure used the post-Great Financial Crisis's nascent home equity lending market as a sandbox for building this technology. Now, their automated rules engine has progressed to the point that
we don't have any underwriters. We don't have anyone that's making an underwriting decision. We have people that are helping to just deal with sort of more administrative processes.
And when it comes to qualifying borrowers,
it means that we don't service every single customer, right? So if you don't fit our rules, there's not anyone you can call here to sort of, make a discretionary decision about doing the loan for you.
Fully automated underwriting, free from human intervention, allows Figure to originate homogeneous loans, meaning even though borrowers' profiles may differ from the perspective of credit scores or debt-to-income ratios, the process by which the borrowers are approved is identical between every single loan, whether it's Figure originating the loan or a different lender using Figure's technology. This eliminates origination risks, and investors love having more certainty about how the loans will perform.
Based on how our loans have performed with that process, people have gotten comfortable that the process actually, in a lot of ways is better than a process with any sort of human intervention.
Inefficiencies in originating what was typically a bank product first drew Figure to home equity. Now they think they can export their automation to other non-agency markets that need more investor liquidity in order to grow.
We're going to start to focus on using this exact same technology for jumbos and non-QM, and we're actually talking to someone about potentially a DSCR product as well.
To learn more about how Figure plans to expand automated underwriting into other non-agency lending spaces, visit nationalmortgageprofessional.com. For The Interest, I'm Ryan Kingsley.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
For The Interest, I'm LaDonna Lockard. I'm here today with Rich Swerbinsky. Rich, tell me, how did you get started in the mortgage industry?
Like most people, came in the side door, wasn't expecting it. Yeah, I was working in the restaurant business. I was 19, 20 years old. And I was sick of working nights, weekends, and holidays, and took a job at my buddy's credit union as a consumer loan guy, spent 9 or 10 months there. And started sending my application and resume just into local banks, trying to get a better job in finance. And showed up for a loan processor interview one day for a bank called Metropolitan Bank and Trust, just outside of Cleveland, Ohio. And I'm sitting there in the waiting room, and a gentleman comes out and says, hey, I know you're here for an interview for a loan processor position. Would you be interested in interviewing for a position in secondary marketing? I said, I have no idea what secondary marketing is, but I'll interview for anything. And yeah, that started I was lock-in boy, for about 6 months, and really enjoyed secondary, the financial, the money backdrop and backbone of the industry, and ended up working my way up to like AVP secondary. A couple banks hired me to run secondary. A bank hired me to run mortgage lending, and the mortgage collaborative hired me to get that company off the ground. So it's like most people, an awkward tale of entry into the mortgage industry.
No, I think you're so right. I don't think there's a lot of people who set out when they're in kindergarten. They're like, you know what I really want to be when I grow up. So I totally understand that. And since then, you've gone off, you've actually started up a new company, you're consulting now. What do you think is an area that most business owners need to improve upon? Do you see a commonality? What are you kind of seeing there?
Yeah, it's a tough climate in mortgage right now. So, with that backdrop, I think the two things that business owners struggle with most is, what do you spend money on and in what order? Order is very vital, and, how much you invest upfront or not. I think the other thing too is just the reality of getting to the customer. If your customer is customers or other businesses, it's very difficult. Especially this climate right now in the mortgage industry. So I think it really requires a very hardened, realistic approach to, how hard it is to sell anything, no matter how good and biased you are in your own product and how good you think it is, and just the repetition that is needed to, get the at-bats essentially necessary to get some hits, score some runs, and win some ball games. So
I think you're right. And you brought up such a great point of getting actually in front of your customer. That is so challenging. Something that I know that you do better than probably just about anyone else out there. Your online social media presence, particularly on LinkedIn, is phenomenal. Like I could probably jump in there and learn like I'm in a master class just based on your profile alone. What is a tip that you would say for others who are looking to grow their presence on social media? What's something that you feel like is maybe underutilized or just an area that people aren't doing enough with?
To me, social media, and like my personal life, I loathe social media. I use it strategically for business only. It's not rocket science. Honestly, there's so much amazing content out there on how to be effective on whatever platform it is that you want to be effective on. I tell people all the time too, watch others that you think are very effective and good on social media and emulate them. I mean, it's really not that difficult, but I think the biggest part of it though is just commitment and consistency. It's one thing to say, oh yes, LinkedIn and social media is important to growing my business. It's another thing to put the blood, sweat, and tears, the hours, or in some people's case, investment in people to do that for you into practice. And it is all about really, the commitment to it and the consistency to making it part of your professional DNA and part of how you just execute your days professionally. I would say that's the biggest thing. So.
Fantastic. Well, I hope people connect with you if they're not already, because you have a lot that you can show them. And if they're going out to emulate anyone, it should be you. So thank you so much for being here. I appreciate your time. I look forward to chatting with you again in the future. And for the interest, I'm LaDonna Lockard.
In a market where cash is king, there's a game some dare to swing. With houses old and roofs that drip, comes a tale of loans that flip. Fix-N-Flip, they call the game, where fortunes rise and fall the same. With hammers swung and paint a splatter, they turn old shacks into homes that matter. But oh, the loans that fund the fund, a dance with risk under the sun. Borrowed cash to buy and mend, hoping the profits never end. The lender smiles all polite and prim, but deep down they're rolling the whim. Will the flip flop or soar on high? Only the housing gods know why. With interest rates that make you sweat and deadlines that you just might forget, your hustle is hard with fingers crossed, praying your investment's not lost. So here's to the Fix-N-Flip loans, where dreams are built on creaky bones, a roller coaster ride of hopes and fears. In this game of real estate, pioneers.
Welcome back to this week's Mortgage Meteorology. We will touch on all things to do with the overall climate of the housing market, not just in our neighborhood, but yours too. As we move towards summer's heat, prices are starting to also warm up. More than 90% of metro markets posted home price gains in the first quarter of 2024, according to the National Association of Realtors. That's of course due to 30-year fixed mortgage rates showing scattered conditions, ranging from 6.60% to 6.94%. Among the major U.S. regions, the South registered a flood of single-family existing home sales in the first quarter, with a year-over-year price appreciation of 3.3%. And if you tuned in last week, it's no shock that 8 of the top 10 most expensive markets in the U.S. were in California. But more surprisingly, 6 of the top 10 metro areas with torrential activity in terms of the largest year-over-year median price increases were in Illinois and Wisconsin. Moving on, Adam says that home equity is looking a bit gloomy. The portion of mortgages that were equity rich decreased in 26 of the 50 states. The areas where equity saw the frostiest declines were in the South, led by Kentucky, South Carolina, and Georgia. The Midwest and West saw sunnier skies in terms of equity-rich homes, led by South Dakota, Hawaii, and Montana. Here's hoping to see more mellowing as the weather gets warmer. I'll meet you back here next week with your updated housing market barometer.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.